How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for April 24, 2018. Here's a snapshot of the institutional positions on the majors and the US dollar. And let's get into the positions the institutions were holding on gold. So what do we see here in gold? So, excuse me, I just finished doing the webinar, so my throat's a little bit itchy and scratchy. So what do we see here? So we see that longs were dropped from 237 positions, 237,000 to 225,000, and that came as the price was consolidating here. And what do we see? Eventually a move to the downside. But that weekly 20 EMA is still holding. Okay, as that drop happened, they added shorts, which caused a big drop to happen. So it dropped for two reasons: closing off longs and adding shorts. Shorts becoming pretty aggressive from 74,000 to 89,000, and that causes short exposure to increase from 24% to 28%. Taking a look at the coloration of the cells, they're still somewhat blue, so we really can't be taking any trades right now because we're still in consolidation and we can't take any longs or shorts. This consolidation would have to break here or break lower, but taking shorts here would not be a good idea. Taking longs here would be a good idea. So the data is not very clear. It's showing some movement to the downside following the euro US dollar weakness, but nothing that we can trade off of. Oil, what do we see with oil? We see that the institutions decreased, so they closed some longs from 849,000 to 839,000, and they increased shorts from 121 to 126, and that came as price was consolidating right here. All right, so they're still very much bullish here. Look at the numbers: 87% and 712,000 positive. So we can't take any trades. We're waiting for a push to the downside, and taking longs, profits on longs and increasing shorts is the beginning stages of what we'd like to see, but we need to see more of that for price to get down here. So right now, nothing else to see. US dollar, what do we see? We see not much happening here on the charts. We see longs decreasing from 23,000 to 21,000 and shorts decreasing from 25,000 to 23,000. So not much going on here. Shorts are somewhat aggressive but becoming less aggressive, and short exposure still remains at 52%. We can see that as this candle was consolidating here, that's what this data represents. So we can see that the eventual move to the upside is what took place, so they probably added some of their longs and probably continue to reduce their shorts. We'll see next week's report to see if that is exactly what is in play. Okay, so Aussie US dollar, we see a big increase in longs, which is good. And that happened as this price was dropping. So big increase in longs, but they also increase shorts. Increase in shorts is what causes price to eventually drop into that area of demand. So this is somewhat promising for a move to the eventual upside, an eventual move to the upside, I should say. But you know, we went over the webinar why this may not be the greatest position for everybody to take. It is for me because it follows my rules. And I'm looking for more signs that longs are being added, and I want to see on next week's report that these shorts that were added to cause price to drop, I want to see them being reduced. It may not be so because we can see that this candle was a further drop, so we could see another increase in short positions which were used to get price to drop, and then the next report I want to see those shorts being closed off. Okay, so on the USDCAD, what do we see? We see that longs were closed off from 58,000 to 48,000, and so were shorts from 28,000 to 23,000. That happened as price was rallying up from this area of demand. Okay, so price is rallying up from an area of demand, and they're closing longs. Doesn't make much sense, right? And they're also closing shorts, but we can see that price moved to the upside. So why are they closing off longs? Is it because this eventual move to the downside that we're expecting? Is this move upwards? Was that mostly caused by this dramatic close of short positions? It's possible. We see that there's in play an eventual move to the downside that could take place. and then for them to continue piling onto their longs. So when price does get down there on the daily chart, I'll be watching the COT report to see if what we see is longs increasing and shorts decreasing. Okay. US dollar, Swiss franc, what do we see? We see a big drop in long positions or big increase I should say, from 35,000 to 39,000. We can see that longs are starting to become more aggressive, and we can also see that they increase shorts. So why would they be increasing longs and increasing shorts as price was moving up? Was it because, well, we know that there's that trend line, right? So they had to increase longs dramatically to cause a break of it, and that's what happened. And now we're hitting areas where price could just reverse back to that area of demand and it moves to the upside. So wouldn't you need to be adding in shorts as a hedge for those longs that you're adding here if eventually price is going to go lower, right? Because if price is going to go lower, you don't want to take a loss on those longs, and you want to start building a long position. So you want to start building it up here, and then when you add some shorts here, you close those shorts down here, and it's as if you got those long positions all the way down here. And then you can add more longs, which causes price to move up. Okay. And Euro US dollar, what do we see? A big drop in long positions as I was expecting. We came to that weekly area of the trend line, the ascending trend line, and I said we're going to need to see them push downwards. Well, right when we got to that trend line, what do we see? A big drop in longs. So they're closing off a big portion of their longs, and they pretty much did nothing with their shorts, and eventually what happened? Price broke down. So probably next week we're going to see that shorts were increased and more longs were being closed off, and we can see that now we're hitting this area of weekly demand, so probably get a little push to the upside, and then we'll take it from there. But this is playing out exactly as we had forecasted. Okay. So we got to the pound now, and we see the same thing happening from 113,000 down to 90,000. Big longs being closed out, big drop, and a reduction of short positions from 65,000 to 52,000, and then we get this big drop. So this big drop probably next week we're going to see was more longs being closed out and probably even adding some shorts, but we'll see. Overall, what's happening on the charts is exactly what was forecasted. US dollar, Japanese yen, you'll notice that on this one I added the commercials because it's important to see that there are times when I do look at commercials. I've been asked this many times, do you only look at non-commercials or do you also look at the commercials? And it's moments like this where I do look at both, because if you look at both and take both data into consideration, you'll see that the difference between the two is a positive 13,000. So it's showing that there's a bullish pressure here, and that's as price was consolidating, and you can see price eventually does move to the upside. Now we're coming into this area of resistance. We're probably going to get a move to the downside until we get eventually momentum to shift, and then again another push to the upside. Okay. And Kiwi, last but not least, we have longs being closed out, shorts being dropped, and long exposure increases by 1 point. And as that happens on the longs being taken for profit, same thing with the euro, same thing with the pound, all the same story, taking profits on longs, which causes price to drop. Now we're testing this weekly area, or getting very close to testing it. That's nested within this area here, so we could see a move to the upside. Okay, but eventually I think we're going to see price go even lower. All right, guys, that is your CFTC reports, and I hope you enjoyed it, and I hope you'll use it to plan some trades for this coming week. Until next time, take care.